This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The world oil market is heading for a sizable surplus in the new year, the International Energy Agency said on Tuesday as it reassured markets that the agency stood ready to act if needed to cover any supply disruption from Iran. Oil prices have risen in recent weeks on investor concern that Israel may retaliate against a missile attack from Iran, a major oil exporter and OPEC member, by hitting its oil facilities or nuclear sites. But the IEA, which manages industrialized countries' emergency oil stocks, said public stocks were more than 1.2 billion barrels and spare capacity in OPEC+, which comprises the Organization of the Petroleum Exporting Countries and allies such as Russia, stood at historic highs.
Oil prices tumbled more than 4% to a near two-week low on Tuesday due to a weaker demand outlook and after a media report said Israel is willing to not strike Iranian oil targets, easing fears of a supply disruption. Brent crude futures fell $3.28, or 4.2%, to $74.18 a barrel at 11:18 GMT. West Texas Intermediate futures lost $3.33, or 4.5%, hitting $70.50 a barrel. Both benchmarks had earlier fallen by $4, reaching their lowest since the beginning of October. Both benchmarks had settled about 2% lower on Monday. They are down about $5 so far this week, nearly wiping out cumulative gains made after investors became concerned Israel could strike Iran's oil facilities in retaliation for the latter's October 1st missile attack.
Moving on to the top news in the energy sector.
Russia has available facilities to increase its crude oil production by around 700,000 barrels per day, according to a report published by the International Energy Agency, IEA, on Tuesday. Spare capacity is held by the largest producers in the Organization of the Petroleum Exporting Countries as well as some of their allies as a consequence of their decisions to cut supply to the world market due to rising output from non-allied producers such as the US, Brazil and Guyana. The IEA estimates Russia has sustainable capacity, or capacity levels that can be reached within 90 days and sustained for an extended period, of 9.8 million barrels of oil per day, BPD, excluding gas condensates.
OPEC cut its estimate for China's crude oil demand growth in 2024 for a third straight month in October, but the producer group is still massively optimistic given the reality of falling imports. The latest monthly report by Organization of the Petroleum Exporting Countries, OPEC, said China's crude oil demand will expand by 580,000 barrels per day, BPD, in 2024. This estimate is down from the 650,000 barrels of oil per day gain forecast in September, and is also 180,000 barrels of oil per day below the rise of 760,000 barrels of oil per day OPEC was predicting in July for the world's biggest oil importer. Next, we have the top news in metal markets. Copper prices sank to a three-week low on Tuesday, pressured by confusion about the scale of stimulus measures in top metals consumer China and geopolitical uncertainty. Three-month copper on the London Metal Exchange slipped 1.2% to $9,540 per metric ton in official open outcry trading, having touched the lowest since September 24. Copper and other base metals rallied last month after China announced what seemed to be a massive plan to revive its ailing economy, but since then, officials have failed to provide much detail.
Dalian iron ore futures gave up early gains on Tuesday to close slightly lower, as prospects of softer global demand for steel and weaker Chinese economic data outweighed hopes of further stimulus from the world's top consumer of metals. The most traded January iron ore contract on China's Dalian Commodity Exchange ended daytime 0.38% lower at 791 yuan and 50 fen, $111.26, a metric ton. The benchmark November iron ore on the Singapore Exchange was 1.43% lower at $106.05 a ton.
We will now look at the top news in the agricultural sector.
France's Farm Ministry on Tuesday further cut its estimates for the country's rain-hit soft wheat and barley crops, while raising its outlook for the maize harvest that is getting underway. Repeated heavy rain in France, the European Union's largest grain producer, reduced planting and hampered development of wheat and barley, leading forecasters to predict a plunge in wheat exports this season. Soft wheat production in 2024 was revised down to 25.43 million metric tons from 25.78 million last month, nearly 28% below last year's level and the smallest volume since 1986, the ministry's data showed.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.